Alright, so this week got some serious market moving potential. It's Labor Day week and we're jam-packed with earnings reports and economic data that could really make a difference. I'm here to break it all down so you know exactly what to watch for and why it matters. First up, on Tuesday morning, we've got Hello Group reporting before the bell. This Chinese social networking platform has been navigating some tough waters with the legal environment over there, with strict content regulations, increased scrutiny over user data privacy, and limitations on how the platform can monetize user data. It'll be an interesting one to see how they're adapting. Keep an eye on their user growth and how they're monetizing the platform. Moving to Tuesday afternoon, we have Zscaler. These guys are all about cloud security, which is critical right now as businesses across the globe continue to shift all their operations online. Zscaler offers a comprehensive cloud-based security platform that protects users and data from cyber threats, making it a cornerstone for any organization looking to secure their digital infrastructure. As companies continue to embrace the cloud, Zscaler's growth is something to keep an eye on. Investors will be paying close attention to how they're expanding their customer base, particularly among large enterprises, and what kind of future demand they're forecasting as the landscape for cybersecurity evolves. Dollar Tree, known for its fixed price model, attracts a wide range of shoppers looking to stretch their dollars further, making it a crucial player in the retail sector, especially during periods of economic uncertainty. Investors will be closely examining their same-store sales rate to gauge whether they're successfully driving foot traffic and converting it into sales. Additionally, with inflation still running high, how Dollar Tree is managing its costs, maintaining margins, and navigating supply chain challenges will be key to their financial health and ability to continue offering low prices. Also reporting before the bell on Wednesday is Dick's Sporting Goods. As one of the leading retailers in the sporting good industry, Dick's plays a pivotal role in gauging the health of consumer discretionary spending, especially in areas like fitness, outdoor activities, and sports equipment. With consumer spending under pressure due to economic uncertainties, their results will provide valuable insights into how much consumers are willing to spend on non-essential items. Beyond just traditional brick-and-mortar sales, investors should closely watch their e-commerce growth, which has become increasingly more important as shoppers shift online. Another one on Wednesday afternoon is C3.ai. They're at the forefront of bringing AI to the enterprise level, offering software that helps businesses harness the power of artificial intelligence to optimize operations, reduce costs, and improve decision-making. Their platform is used across various industries, from energy and healthcare to manufacturing and finance. With more companies looking to incorporate AI, their growth potential is massive. Keep an eye out for updates on the customer wins, especially in key industries, and any new contracts they've secured that could drive future revenue growth. NIO reports before the bell on Thursday. As one of China's leading EV manufacturers, NIO's performance is always a market mover. Known for their premium electric vehicles, NIO has been a pioneer in the Chinese market, offering not just cars, but also innovative battery swapping technology that sets them apart from competitors. They also focus heavily on developing self-driving features in smart vehicle ecosystems. Keep an eye on their production numbers, which indicate their ability to scale, and any update on their battery tech, especially in the face of competition from the other big Chinese EV makers like XPeng and Li Auto. FuelCell Energy is reporting before the bell on Thursday. As the global demand for renewable energy continues to rise, FuelCell Energy's innovative productions are becoming increasingly relevant. The company specializes in clean energy solutions using fuel cell technology, which converts chemical energy from fuels like natural gas and biogas directly into electricity with minimal emissions. This technology is particularly valuable because it provides reliable, scalable power solutions that can operate independently of the grid, making it a critical component in the transition to a sustainable energy future. Investors will be closely watching how FuelCell is scaling up production to meet the growing demand for clean energy. Broadcom reports after the bell. They're a major player in the semiconductor industry, producing essential components that power everything from smartphones to data centers. Their results will provide crucial insights to the health of the broader tech sector. Broadcom has been deeply involved in the global 5G rollout, supplying chips that enable faster and more reliable communication networks. Investors will be interested in updates on their role in 5G tech and how the demand for their chips is evolving across various industries. Also reporting Thursday afternoon is DocuSign. In an era where remote work and digital transactions have become the norm, DocuSign's digital signature solutions have never been more critical. The company has been a leader in transforming how businesses handle agreements, making it easier and more secure to sign documents electronically. Investors will be watching closely for updates on their customer retention rates, which indicate how well they're maintaining their user base in a competitive market. Additionally, any new innovations or product offerings that DocuSign introduces could further solidify their position as a market leader in digital transactions. On Friday morning, Big Lots reports before the bell. As consumers continue to seek out bargains, discount retailers like Big Lots are gaining increased attention. The company's ability to attract budget-conscious shoppers has made it a key player in the retail space, especially during times of economic uncertainty. Investors will be closely examining their same-store sales figures, which are a critical measure of retail performance. Additionally, how Big Lots is managing its inventory in a challenging environment with supply chain disruptions and fluctuating demand will be crucial in assessing their operational efficiency and future growth potential. First up, on Tuesday morning, we have the S&P Global US Manufacturing PMI report. This report serves as an early indicator of the manufacturing sector's overall health. Released just before the ISM data, it often can give us an initial glimpse into whether the sector is expanding or contracting. A reading above 50 signals growth, which can be a positive sign for economic momentum. On the other hand, a reading below 50 signals contraction, potentially hinting at challenges ahead. Investors should pay close attention to how this report could shape expectations for the day's upcoming data and overall market sentiment. Shortly after, at 8 a.m., we'll see the release of the ISM report. Unlike the earlier S&P report, this one is widely regarded to be a more comprehensive gauge of manufacturing activity. Again, a strong reading above 50 signals expansion and can lift market confidence, whereas a drop below 50 raises red flags about the sector's health and broader economic implications. Given its reputation as a critical economic metric, this report often triggers significant market movements, especially if the numbers differ from expectations. Also at 8 a.m., the ISM Manufacturing Price Index will be released. This report monitors the prices manufacturers are paying for raw materials, offering insights into the inflationary pressures within the sector. Rising prices can be a sign of a strong demand, but also bring concerns about increasing inflation. If the report shows higher than expected price growth, it could heighten fears of inflation, potentially influencing the Fed's approach to monetary policy. Traders should be mindful of how this data might impact interest rate expectations and market dynamics. Wednesday morning kicks off with the trade balance report at 6:30 a.m. The trade balance measures the difference between what the U.S. imports and exports. A trade deficit occurs when the country imports more than it exports, which can be a drag on GDP growth. If the deficit is larger than expected, it could weigh on market sentiment, particularly for companies that are heavily reliant on exports. Conversely, a smaller than expected deficit might boost confidence in the economy's ability to grow. This report is especially important for those keeping an eye on currency markets, as significant deviations can impact exchange rates at the stock market. Later at 8 a.m., we'll get the JOLTS job openings report. This report is a key indicator of the labor market strength, showing how many jobs are available but unfilled. A high number of job openings suggests that businesses are confident in the economy and are looking to expand. However, if there are too many job openings, it might indicate a tight labor market. In a tight labor market, employees may have to offer higher wages or better benefits to attract and retain employees, which could lead to wage inflation. Wage inflation is something that the Fed watches closely because it can contribute to overall inflation if businesses pass on higher labor costs to consumers in the form of higher prices for goods and services. Investors should watch the report to gauge the strength of the labor market and potential future wage pressures. Thursday starts early with the ADP non-farm employment change report at 6:15 a.m. This report provides an early look at the private sector employment and often sets the tone for the official non-farm payroll report on Friday. Strong employment growth here is generally a positive sign for the economy, indicating that businesses are hiring and expanding. However, if the number comes in weaker than expected, it could suggest that the labor market is starting to cool off, which might raise concerns about economic momentum heading into the end of the year. Investors should be prepared for potential market movements, especially if the report surprises. Following the ADP report, at 6:30 a.m., we have the weekly initial jobless claims. This report tracks how many people are filing for unemployment benefits for the first time. It's a real-time indicator of the labor market's health. Lower claims are generally a good sign of a strong job market, which supports consumer spending and overall economic growth. On the other hand, if claims are rising, it could indicate that more companies are laying off workers, which could be an early sign of economic trouble. Watch how this report might influence market sentiment, particularly in sectors that are sensitive to employment trends. At 7:45 a.m., we get the S&P Global Services PMI. This report offers an early look at the health of the U.S. services sector, which is a major driver of the economy. A reading above 50 indicates expansion, while reading below 50 could signal a slowdown, raising red flags about potential weaknesses in areas like retail and hospitality. Investors should watch this report closely for early signals on how the services sector is performing, especially as it often sets the stage for subsequent economic data. Then, at 8 a.m., the ISM Non-Manufacturing PMI is released. This report is similar to the manufacturing PMI, but focuses on the services sector, which includes industries like finance, healthcare, and retail. A strong reading here indicates that the services sector is doing well, which is critical for overall economic growth. However, if the number is below expectations, it could suggest that the broader economy is facing challenges, potentially leading to market volatility. This is a key report to watch, especially since the services sector makes up a large portion of the U.S. economy. Also at 8 a.m., we have the ISM Non-Manufacturing Price Index. This report tracks inflationary pressures within the services sector. Rising prices here could indicate broader inflation concerns, which might influence the Fed's decision on interest rates. If prices are climbing faster than expected, it could lead to fears of inflation getting out of control, potentially prompting a more hawkish stance from the Fed. Traders should watch this closely, as it could impact expectations for future monetary policy. We start Friday with the average hourly earnings report at 6:30 a.m. This report measures wage inflation, which is a critical indicator of consumer spending power. and overall inflationary pressures. If wages are growing faster than expected, it could suggest that inflation is picking up, which might prompt the Fed to reconsider their rate cut strategy. On the other hand, if wage growth is sluggish, it could indicate that the labor market isn't as tight as previously thought, potentially easing inflation concerns. Also at 6:30 a.m., we get the highly anticipated non-farm payrolls report. This is the most closely watched employment indicator of the week and has the potential to move markets significantly. A strong payrolls number indicates robust job creation, which is generally a positive sign for the economy and can raise market sentiment. However, if the number falls short of expectation, it can lead to concerns about the strength of the economic recovery, potentially causing market volatility. Finally, we have the unemployment rate, released alongside the non-farm payrolls at 6:30 a.m. The unemployment rate is a key measure of the overall employment situation in the U.S. A decrease in the unemployment rate is usually seen as a positive sign, indicating a stronger job market. However, if the unemployment rate drops but wage growth remains stagnant, it could suggest that the labor market isn't as healthy as it appears, which might influence market sentiment and economic forecasts. And that's your market movers rundown for Labor Day week. There's a whole lot happening, so make sure you stay informed. If you found this breakdown helpful, hit that like button and subscribe to stay ahead of the game. Keep your edge, and I'll catch you in the next one.